Okay, welcome back, fail-safe investors. I have a special video for you all today. I told you a couple days ago that I was bringing back Battle of the Brands, and I wanted to take some time out to really challenge myself and find a company that is pretty much a miracle within itself and something that's going to really challenge me as an analyst of companies. I don't want to say a financial advisor, any of those things, but someone that likes to find companies that it might be worth the investment, or a fail-safe investment, I should say. So let's not make you wait too much longer to see what company it is. We're just gonna get right into it. Starbucks. Let's go. So Starbucks, the ticker symbol SBUX, which is pretty much S bucks. They're selling for around like $76 a share right now. They have a price to earnings of about 27, a multiple of 27, so that's pretty high. If you look at a lot of other companies, that's selling pretty high. That's selling higher than Apple right now. That's selling a lot higher than Coca-Cola. I think Coca-Cola's price to earnings is around like 19, a multiple of like 19 currently. The price to earnings growth is like 24, which is extremely high. But I will say that this company does have an earnings per share of about $2 per share, which is, I guess that's pretty solid or pretty good. And they do pay a dividend of like 2%, 2.15% to be exact. And their payout ratio, I wouldn't say it's modest, but it's pretty close. Like I said in the video before about payout ratios, I would be able to like give a company a little bit of leeway and let them pay out about 50 to 60%. So Starbucks pays out about 58% of its profits to its dividend. Now, Starbucks, I wouldn't categorize as a growth company, and it's not because they pay a dividend, because like I said, like most growth companies will not pay a dividend. So it's not because that it pays a dividend that I'm not going to consider this a growth company. It's other things at play that I would not consider this a growth company, and it's pretty much how it's being managed. So all the evaluations aside, and I want to mention before we move on into this video, that those are some pretty high evaluations, and this company would be considered overvalued. But I'm going to try to make those points throughout this video. And pretty much with an evaluation, you want to see like what type of return are you getting on your money, because the purpose of investing is you put some money in, you want to hopefully make a profit in the future, or you want to profit off the company's gains. And so I'm going to try to do my best to explain how this company operates, the business segments and all that. And then I'm going to let you be the judge of, do you think this company is a fail-safe investment or worth investing in general, whether it's speculative or not. If you go on the investors page for Starbucks and look at their annual report, and then you pretty much compare that up against what they list on the SEC's page, there are some slight and subtle differences, but not that anything that's too drastic. So the business segments are the same on both of those pages. Now, Starbucks currently has 31,000 stores total, but out of those 31,000, or a little bit over 31,000 stores, they only actually own about 55% of those stores. So it's about like a little over 15,000 of those stores that they actually own. And out of those 15,000 stores that they own, that is pretty much the bulk of their net income or net revenue. So out of the 31,000 stores, to put it simple, 55% of those stores they own, and that is 81% of their net revenue. So they're pretty much missing out on a lot of money that's on the table, but that's just my opinion, and I try not to mix the opinion with facts. So the other 45% are stores that are licensed. So Starbucks isn't a franchise. So the difference between like a franchise store and a licensed store would be like a franchise store would be this company helps you in like finding the location, the setup, and pretty much from the ground up, they help you throughout that process of getting your store started up. And then a licensed store is you pretty much can go and find a store wherever you want, and you're just licensing that trademark. You're pretty much paying Starbucks to use their trademark. And that's what Starbucks does a lot, I'm starting to notice, or that I've seen in their company, pretty much 10K, is they license out a lot of their products. So if you go to like a gas station or somewhere, you get a code like Starbucks latte or something like that, that's pretty much a PepsiCo product that they license from Starbucks. So that's not a Starbucks. That is a Starbucks product per se. They use the trademark and all that, but that's a PepsiCo product. It's created by PepsiCo. Even in Walmart, if you see like Starbucks coffee, that's a partnership that they have with Nestle. So the only thing that Starbucks themselves actually control and operate is the stores that you see that are actually corporately owned. There probably is a map that you could tell, but I'm just going off of what I learned about the company. Also on their 10K, they break that up more into like Americas and international. So international is pretty much everything that's not in Americas. And in Americas, they include everything in the North America, so that's Canada, Mexico, and then the whole entire South America. So 69% of their stores are in America, so that's North America and South America combined, and then the rest is like international. So they do have a nice stronghold in China, but that's not contributed to too much of their revenue. Like a lot of companies like to mention China in their 10K because that is an emerging market. So a lot of people think like that's going to boom even more and that's more revenues for the future, more growth for the company. But China isn't contributing that much to Starbucks. Yes, they do have a huge store in Shanghai, China. They have a headquarters in Shanghai, China, but it's not contributing that much of a difference to the bottom line. Let's just say that. So moving on, they also do operate a couple warehouses where they roast their own beans. Now they do not grow the beans, but they do have a support program for farmers who grow coffee beans. Arabic coffee bean, I think, is the coffee bean that they use in most of their coffees. So they do have a roast warehouse where they roast these coffees, and they pretty much have employees in there also. So completely worldwide, Starbucks employs 360,000 employees. That is a huge corporation. Now, I would definitely say that PepsiCo and Coca-Cola are larger than Starbucks, and yet Starbucks employ almost double that of Coca-Cola, if I'm not mistaken. So you got to look at stuff like that. They employ a lot of people. When you look at their revenue, their operating revenue was like $26 billion in 2019. Now, that have grown over the past 5 years. They have pretty much grown, which is good for any company. I will say that. But they are like operating at a $26 billion revenue, but they spend $22 billion to make $26 billion. Now, even though they do have a net income of around like $3 to $4 billion after you take out the taxes and de-amortization and all of that stuff, that is pretty good for any company to have a profit. Like I said, they have a $2 earnings per share, so they do have a profit of about $3 to $4 billion, and then their capital expenditures like $1 billion and something, I think 1.8. But this company, in my opinion, looking at the metrics for this company and how they operate and how they spend their money, I would definitely say this is a management type of issue. If like there were a couple reasons that I wouldn't invest in this company, one would be like from management. They do have a different CEO than they did when they pretty much took off. So Howard Schultz was the CEO that kind of got Starbucks to where they are today, and then they replaced him with another CEO. So the current CEO of Starbucks is Kevin Johnson, and he pretty much been the CEO for like the last couple of years. So that's another thing that I wouldn't invest in. Now, when it comes to Starbucks, they have had some bad publicity in the past, but that seemed to not have slowed them down or stopped them in any way. Most of their bad publicity does center around like Black Lives Matter and black people in general. They have been not appreciative of the black community. I will say that. Now, I did buy some Starbucks to make this video. I do not operate, or I do not go to Starbucks on a regular. That's just me personally. And that is what I would say would be Starbucks' biggest competitor, is pretty much when people does have discretionary spending or capital to spend, they will pretty much go to Starbucks. But when times get tight and people are more in a saving mode, like the environment that we're kind of currently in now, where a lot of people are trying to save money, you probably won't see too many people going out and spending like $4 to $6 for a cup of coffee. It just doesn't make sense when you go to like a gas station, or probably most people that generally does regularly drink coffee will probably have a coffee maker in their house. So I'm not saying that Starbucks is a bad buy. I'm just saying that you have to look at everything when it comes to a company, and this company does seem overpriced. Now, if this company was selling for around $30 to $40 a share, I would jump on it. I would recommend everyone jump on it. I would say this is a steal. But at $76 a share and the price to earnings multiple that it's selling at, And considering it's not a growth company, even with the dividend in play, I still would say this company is overpriced. Even the technical analysis, it has a beta of 0.80, so it's not going to swing up in the near future like crazy. It's about 20% off of its all-time high from like February and March. It does have room to go back up to that high. I don't see this company bringing in any significant profits in the near-term future. Now, if you hold the stock long-term, who knows what they can produce for you. But like I said, the purpose of investing is you definitely want to see profits. And the best way to do that is to invest in a fail-safe way, which is through fundamental analysis combined with a little technical analysis, understanding the company that you're investing in. And when it comes to Starbucks, my recommendation would be if you don't already own this company, there are a lot of better companies that you can own out there in the stock market. I definitely wouldn't go seeking for this type of company. And if you do own this company, I will either hold or sell, then that's up to your preference. I probably would hold to get back up to that February, March high, and then it'll probably reach some resistance around that point, so I'll probably sell around then, in my opinion. Now, with hindsight being 2020, I would definitely say that if I was going to invest in this company as like a growth speculative stock, I probably would have did it somewhere like around here on the chart. But like I said, hindsight of 2020. But I'm pretty sure the evaluations for this stock would have been a relatively more attractable at that price point. And then you would have nothing but upward gain around that point. But that's just my opinion. But like I said, you know, I can't end this video like this with a recommendation and all these type of things. We have to do a deeper dive and then see why I say that this company is kind of overvalued and what you're getting on the return side doesn't equal pretty much what you're paying for these shares. So you already know what I'm about to say. Let's just jump right into it and let's look at the financial statement. Now, when it comes to Starbucks' balance sheet, this is a perfect example of a company that you kind of would want to stay away from if you were looking into a company. And this is why fundamentals are key. You have to look into a company and look at their balance sheet, their income statement, and their cash flow statement. So when you look at the balance sheet, like I've mentioned already in the video, they have a revenue of like 26 billion, 26.5 to be exact. Now they were able to keep $2.7 billion in cash on hand. This from 2019. So the most current balance sheet, 2.7 billion in cash, about $1 billion in receivables. So that's cash that they haven't received yet, but they will receive in the next 12 months or this year to be exact. And then about like 1.5 billion in inventory and like 300 something million in other to equal us about 5.6 billion in current assets. So that's assets that they can liquidate or have within this year to be exact. But 5.6 billion in current assets versus 6.1 billion in current debt and liabilities, that's not good. Now, this company has pretty much weathered the storm when it comes to like, you know, economic recession that you can pretty much say we're currently in to a certain extent. Now they have weathered the storm, but this company is operating with a lot of debt that they don't really need, especially when you have a net income. You have free cash flows after you pay for your capital expenditures, and then you pay a dividend. You can pretty much pay off that debt. You can have more cash on hand. It's kind of like I mentioned before that, you know, when it comes to investing your money, you have to exercise common sense. If you were the manager of this company or the CEO of this company, how would you manage this company? Would you still operate with that much debt when you don't have to? Because you can still cut the debt down. You can cut the debt in half to like a 1% dividend yield, pay half of the payout ratio, and still have money to invest back into the company, put money away, and things like that. You don't even have to pay a dividend at all, but that's just my opinion. But that's just the current assets against the current liabilities. Now, I have seen a couple balance sheets like this before where the current assets are less than the current liabilities and it doesn't look good. But then when you look at the total assets against the total liabilities, then that's where the change actually makes sense, or the difference makes sense, where because the total assets would definitely outweigh the total liabilities. But in Starbucks case, the total assets is 19 billion and the total liabilities is like 25 billion. So they're just operating out of debt altogether. And when we go to like the income statement, yeah, they made $26 billion in revenue, but they spent $22 billion to make that. You walk away with about $3 to $4 billion in the net income after you pay taxes and all that on that. Now, $26 billion isn't bad, but when you have a company that has a market cap of like $89 billion, that's pretty bad. That alone should tell you that this company is overvalued. So when you're looking at a company in revenue versus its market cap, if it's a growth company, then yeah, a 89 billion market cap versus $26 billion in revenue, that makes sense in a growth company, but this isn't a growth company. So you have to take all of these things into consideration when you're looking at a company. So when it comes to the cash flow statement and us trying to get to what the free cash flow is that they have, they did have a 3.5 billion net income. So that's 3.5 billion that they had left over in profits. And then when you look at the capital expenditures, it's 1.8 billion. So when you subtract 1.8 billion from 3.5 billion, you're left with $1.7 billion in free cash flow. So they have 1.7 billion in free cash flow. That's good. This company does make a profit, but in my opinion, this company could be making much more profits. I'm not saying don't buy Starbucks. If you do want to buy Starbucks, definitely do more research, look into it, try to find out everything that you can about Starbucks. It might be a good buy in your opinion. You might see something that I don't see. You probably could see the future for this company, but pretty much they just make coffee. And like I said in this video, when it comes to people having discretionary capital, meaning capital that they can spend on things like that, where you can go to Starbucks, pay $5 to $6 for a cup of coffee and keep it going on about your day, then yes, people will spend that money. But when you have a time period where people are trying to save, that will affect the bottom line of a company like this. Now, with inflation, that could also affect Starbucks. With inflation, let's say we do go through an inflation period, I want to ask you this question. Do you think that Starbucks can raise the price of their cup of coffee and people not question it? Or if they do raise the price, do you think that they'll still maintain their customer base? Now, I will say Starbucks is innovative. They do have things that they're trying to come out with, like reward programs and all of that, but I'm just proposing a question. What do you think about Starbucks? Leave a comment down below. Hit the like button if you do like these videos, if you do like Battle of the Brands. I'm trying to ramp it up and come up with companies that like people probably aren't thinking about, or just don't fit into the norm of like an investment pretty much. And Starbucks, I don't think no one's really looking at Starbucks and saying, oh yeah, I'm going to profit off of Starbucks. So that's what kind of made me go for Starbucks. And another thing what made me go for Starbucks was they don't really have anyone that is truly competing on the scale that they're on. So I'm trying to keep it interesting with these Battle of the Brands and try to give people perspectives on when it comes to investing. Like, there are lots of options out there, but hit the like button if you do like these videos. Hit the subscribe button if you haven't subscribed to my channel. More videos like this will come. I'm going to try to release even more videos, even more content where I'm pretty much teaching terms of investment that you need to know. I already have one video out. More will come sometime this week. I'm going to try to stay up to date on stocks that are like popular right now and try to do like a stock analysis of those companies and give my opinion on those. So that's pretty much what I'm trying to project into the future, that I'm going to be doing all these things just to try to stay up to date and give people an opinion. And in my opinion, I know a lot of people watch these videos and they take what I say to heart. So I appreciate it. I appreciate the love. I appreciate you growing with me and growing with my channel. Hopefully we can continue to make some fail-safe investments and profit off it in the long run. But till then, let's get it, let's do it.